flattest of sessions yesterday. It's like what, Atul Suri was telling us, that don't try and hug the index. All the excitement is outside of it.
Aisha, frankly, if I have to really pick up the punchline to describe the market character or the market feature, I would say dip buyers are not giving it up yet, but they are not making any progress, which means the markets are range bound and they are typically consolidating, which frankly is not a dire outcome. You put 1,000-point rally on the Nifty. After that, there is a bit of a retreat, and that seems to be the global phenomenon at play. But if you connect the dots here, the concerns are getting addressed. New opportunities are emerging. Concerns are getting addressed on the global macro front. Concerns are getting addressed on the local news front, the valuation front. It appeared that we could be in for a howler of a quarter for IT, but that is not the case. Now it is becoming more like a case-specific, sector when it comes to IT. Crude has fallen again, and while FI flows have been slightly volatile, you would argue and say that markets now are, in a sense, really looking at picking up, or bulls are looking at picking more spots, at least in the mid and the small cap space. So I would say that in my book, the market is simply consolidating, and it's a matter of time, whether it's on the Nifty or also on individual stocks, you will see more pronounced price action. The wave of optimism is coming back. The conversation and the narratives on kya lena hai, which was missing, has made a comeback.
Oh, absolutely. Be it the comeback that you've seen in pharmaceuticals, some of the other chemical spaces, the renewed interest once again in the entire railway and manufacturing theme. But for yesterday, we managed to take support near the 200 DMA. The Nifty Pharma clearly snapped its two-day gaining streak. Yesterday, they took a little bit of a step back, and they've cracked below the 200 DMA. US markets, they've closed lower, however, on recessionary fears, or renewed recessionary fears, I should say. And that's pretty much the sentiment across Asia as well, because you are seeing marginal downticks come in, and that's exactly what the SGX Nifty as well is indicating. But today, of course, is going to be the all-important day, today and tomorrow actually, when you've got both Reliance Industries as well as ICICI Bank report its numbers. That's mammoth Nifty weightage that we're going to welcome trade with on Monday morning.
Both are important stocks. Both are stocks which in a sense are important purely because of their weightage and purely because of the market setup right now. Look, Reliance has been an underperforming stock, but Reliance of late has in its mojo. And for Reliance to really take a leap forward now, they need earnings support. It has to be more than attractive valuation and FI liquidity. This time around, markets would be curious to understand that what is happening broadly to the their entire old economy, or the so-called refining business, given that last couple of quarters have been challenging because of the windfall gains. That's one part. The Jio numbers for the quarter gone by were not that impressive. So this time around, Jio numbers, considering that there was a little bit of tariff change and price change which Reliance Jio took in the quarter gone by, that would be important. And then I expect that in today there would be some update on the Reliance Financial Services and the listing of the free share. So these are a couple of pointers which are important. But for Reliance now to regain momentum and continue its march forward, it has to be led by earnings support. It just cannot be buy Reliance because it is cheap, or buy Reliance because the FIs have come back to India. Now you need a little bit of support coming from Reliance from earnings, because last 2-3 quarters you've not got anything from Reliance in terms of an earning push. When was the last time we said, oh, Reliance dhamakedar number?
Yeah.
We've not had that. So I think markets are missing that now. It's high time the Reliance actually comes up and surprises everybody.
Needs to deliver when it comes to numbers, and yeah, you've got a weightage of about 18% in total in terms of numbers that will be declared. RIL, that is 10%, and ICICI Bank, as Aisha flagged off, about 8%. But it's tech as well that's been in the spotlight. Safe to say that for the most part, the earnings are done and dusted. And just take cognizance of the kind of commentary that you've got from some of those IT majors. TCS, it has been double-digit growth. They did positively surprise when it comes to earnings from the European region. Infosys, we saw that wash out. You saw a hit coming in from ramp downs. There were deal cancellations, and there was macro uncertainty clouding it. That's what the manager acknowledged. And just yesterday you had HCL Technologies. They said that they're seeing faster recovery from the slowdown, and the US markets seem to be leading the growth. Just a quick check-in as well as to what some of the other IT stocks within the mid-cap arena delivered. Cyient, for instance, it was a margin beat. Acquisitions really drove that guidance. You also have some of those earnings roundups as well that came in. So Nikunj, just going by the kind of commentary, a lot of those tech majors now are in focus: TCS, Infi, and HCL Technologies.
See, Aman, I'll sound very repetitive if I say this, but that I think is the sum and summary of the IT sector. There was
The
a time
sneeze line, you're going to use it.
that's because
Yeah.
that is not working this time.
Yeah.
I've reported companies. I've reported an era where Infosys actually used to be the benchmark of what IT would do in that quarter. That is not really the picture. Yes, the sector is going through its pain pangs. Yes, the sector is going through in a pronounced slowdown. The sugar rush, what was there in 2021 and 22, that is behind us. But the problem in the IT sector, I think, is very specific when it comes to companies. Look at the commentary, what you have from, or look at the numbers. HCL Tech, numbers are not bad, even though numbers are not bad. TCS, they've indicated that this next 2 quarters would be challenging, and Infosys was a howler, and that is how things have moved. Brokerages, HCL Tech has seen the least earnings downgrade, and Infosys has seen the maximum earnings downgrade. So I would say that you cannot take a very sector-specific call. In 2021, if you took a sector-specific call on IT, you hit a home run. 2022, you took a sector-specific call that you would bet on PSU banks. It was the best trade. 2023, it's going to be very, very specific. We've seen how Mastek yesterday came out with good set of numbers because they represent a different geography. So I think it's evident that a crowded trade, Infosys, has got challenged. TCS is right there in the middle. TCS now has to ensure that the slowdown or the challenges what they have, they do not last for long. And HCL Tech is more like this ray of hope that we are nearing the end of the bad news for IT per se. The sector is in problem. It's not that hunky-dory. It's no longer, a clear blue skies. But if you look at the IT sector from a vantage point, I think it's very, very company specific.
Oh, yeah.